Are you renting a house and looking to buy your first home? Are you a homeowner that has heard about this program? Well, California is going to give you money so that you can buy your first home. There is a program right now from California called the Dream for All program. And on March 27, it's going to be released. Now, there's a lot of things still in the works, and the lenders, quite frankly, are going to be knowing a lot more about it all around on the 28th. I'm going to tell you who this is for, what are the pros and cons about this, and to be fair, how long this will last. You don't want to miss out on this episode. My name is Spencer Su, and my team is the go-to real estate resource in the Bay Area when it comes to advice, strategy, and insights. My team last year in 2022 has helped over 80 clients with their moves, and I look forward to help you every step of the way. If you want to set up a strategy call, my contact details are right over here. All right, let's begin. Okay, so here is a great article about a little bit about the briefing. Who qualifies for this and what's the history of this? Now, we all know that California and a lot of these democratic states love to do some kind of program to help people in all sorts of different ways. One of the ways was the government providing $300 million worth of down payment programs or down payments for an estimated 2,300 first-time buyers. On one end, $300 million seems like a lot, and it is, but not when it comes to just determining and seeing how many people can be helped. So if you do some math, $300 million, and they said estimated 2,300 people, that's equivalent of about $130,000 assistance. Now, how did they come up with this potential number? The Dream for All program is a program that will provide up to 20%, which is basically any of these down payment options for individuals. Now, there are caps of this in terms of who can qualify for this. At the same time, there's also requirements of how much one can buy up to. So to give you an idea, this is going to be similar to like FHA loans, which are income cap or income based. Here in Santa Clara County or in basically the San Francisco Bay Area, if you earn a combined income of under $300,000, then you will be fine to be eligible for this program. So that's the first hurdle. Next, the loan will cover as much of 20% of a home purchase. Now, with a FHA loan, typically the max, including the loan and this down payment, is roughly around a $900,000 price point. So let's do that math, right? $900,000 times 20% is about $180,000. So that's kind of how it's earmarked as to how they allocated how many potential funds this can go to. So that's one part. So they will help cover as much as 20% of a home purchase. Now, what's the catch of it? Whenever a home is sold, transferred, or refinanced, a borrower will owe the state the original amount the state invested, plus a percent of the home's increase in value. If the original loan was 20% of a home's value, the seller will owe the state the original loan plus 20% of its increased value, though that amount will be capped at 250% of the original loan amount. So this is a good program because they will get the upside when it comes to if things increase. Now, I don't see that there's a co-sharing on the downside. So if one has to sell at a loss, how does that occur? That's a completely different problem that we will see over time, because this assumes that home prices will continue to go up, which it does over an extended period of time. But if people are making the wrong moves and they're underwater in the beginning, then this may be a problem for the program. So let's take a look. A social equity feature of the program will be included for those who earn as much as 80% of the area median income. They will get to keep more of their equity when they sell, refinance, or transfer. Also, about 10% of the initial state funds or $30 million will be reserved for those lower income borrowers. So as you can see, not the entire amount of this is going to be even earmarked for most people. The loans can be used to fund down payments and closing costs, including interest rate buydowns. Given the complexity, they will be required to complete a home buyer education course, but that's a pretty easy course. It's an 8-hour online course that can be done. So overall, sounds not a bad thing. So here's a highlight of how it works in theory and how the government thinks it works. You're a renter, right? Or you want to buy a place. You don't have the ability to really save up for money. And so they go with this program Basically, it's a shared equity agreement. I don't know if it's a shared equity on the downside, though. As you can see, the state would be, it's an equity on the increase. So that's a very important thing that you need to be mindful of. What happens if you actually sell at a loss? Don't know about that. We'll see. I don't know if you're now over that whole amount still. I'm not sure how you handle that. That's a TBD. So the way that it works, right? If the government is able to get some of the long-term equity in it, some of that money can get then reinvested. Not only the initial down payment comes back, but also some of the gains, so that this could be a kind of a self-fulfilling or like a self entity for these kind of buyers. Sounds okay and interesting, but if you think about it, 2,300 borrowers, how long do you think that's going to last? I did some quick math just to get an idea. In the Bay Area, as you can see, this is for all counties in the Bay Area, and we're looking at single-family homes, condos, and townhomes that have a sale price of under $907,000. Let's put under 900,000. You can see the volume each month. In March, coming around the corner, you should anticipate this would probably be at about, let's say, 1,000. Let's just do past 12 months. So March so far is at 757. We're about a week left as of time of this recording. So maybe end up at around, maybe similar at that previous number, 880 or 900. And as the month goes on, you'll see a pretty big increase, is my guess, maybe up to 1,000. That's 1,000 homes under 900,000, which is a sweet spot of this program. This is just the Bay Area alone, and that's in a month time frame. If you look at it from the state, right, the median in the Bay Area is much higher than the median for the rest of the state, which is the rest of the state will be trying to take advantage of this. So my concern is this may not last very long. This may just last 1 or 2 weeks. Think about this. The Bay Area has about 6 million people. The state of California has about 40 million people. Doing some quick math, that's like 1/7, right? Roughly there, 1/6, 1/7. So that's about 15%. What you're looking at is, if you look at the entire state, my guess the entire state does 6,000 transactions, under 900,000, probably 6,000 transactions a month. So that program, let's say half the people even use it, it's done within 2 to 3 weeks. So I'm doing this video because it's a great program that, sure, if you want to take advantage of it, it's kind of a way to get people going. But take a look at what has happened with the forgivable loan program. That didn't last very long. That phased out completely. And this program, who knows how long this may last? My guess is probably not very long. So maybe just a few weeks max and it's over. And God knows how you even get back into the replenishment. I don't even know how they handle the replenishment of it, because this program is dried up and it's over. So I want to do this so that you can visually see what it is, the opportunity that there is. It's probably not going to last long, but to be fair, you have lots of other options available. Like if you use an FHA loan or FHA program, you can buy with as little as 3.5% down. You can use widely available programs at 5% down. There is no amount that's capped for that. Everybody can use that, right? So that's an option when it comes to these kind of price points, who it works with and what's eligible. Now, my wife is a mortgage lender. We already have the ability to help you with this. So of course, if you want to learn about it and do this, we can help you. Or if you want to go with any other regular loan, we can be a resource for you. But don't let this stop your goals and your dream of owning a place. But just be mindful, this is not going to last that long. Probably a couple of weeks, and it's going to be wiped out. But you have all these other products that are available that you can easily qualify and easily go after. If you found this video helpful, share it with your friends, like the video, subscribe to the channel. My contact details are right over here. You can reach out to me anytime to go over a game plan that is best suitable for you. And I will see you at the next video. Bye now.